Hi, my name is Aman Bindra, and I'm a real estate, corporate, and lending lawyer here at KSW Lawyers. If you're thinking about setting up a business, there's several ways that you can do that, and the two most common ones you'll see are either sole proprietorships or corporations, also called companies by most people. You can also set up your business as a partnership, but we'll discuss that in a later video because it's not as common. So first, we'll look at sole proprietorships. When you set up your business as a sole proprietorship, all that really means is that you're running it in your personal capacity. So that means you're on the hook for all the liabilities and debts of the business. The benefit of being a sole proprietor is that it's cheaper and there's less paperwork to do when you run your business. But the downside is you're exposing yourself to massive risk because the company could owe more money than you've actually invested in it, and your personal assets can be seized and sold if the company can't make good on its debts. On the other hand, and this is the far more common option, is to run your business through a corporation or a company, as most people will call it. When you set up a corporation, it'll be run by a board of directors, and you can be the director, and it'll be owned by a group of shareholders. But under the law, a corporation is considered its own separate person. So even if you're a shareholder, even if you're the director, the corporation is totally separate from you in the eyes of the law. And that's good because it minimizes your liability. So the liability of a corporation is really limited to the amount of the assets that the company owns. If the company can't pay back its debts by selling all of its assets, then it just declares bankruptcy and you can walk away without selling your personal assets. The only time you might be personally liable is if you personally agree to guarantee something like a loan to a bank, which sometimes happens, or if you're using the company for fraudulent purposes, and the whole purpose of setting up your company was to limit your liability because you were doing something offside of the law. But as long as you're on side of the law and as long as you haven't given any personal guarantees, the biggest benefit of having a corporation is that you limit your liability because it's a totally separate person under the law. A second big benefit of having a corporation is the tax savings. So corporations tend to pay less income tax than individuals. Also, you can write off business expenses from the corporation's income each year, and you might qualify for something called the QSBC exemption, the Qualified Small Business Corporation exemption. And what QSBC is, when you sell your business down the road, you can keep up to $900,000 or so of that money tax-free, provided that you meet certain legal tests at the time that you sell. And that amount is increasing each year. So if you start a business now and sell in 5 years, your capital gains exemption could be over $1 million, provided that you just meet the legal tests when you sell. So if you're thinking about setting up a business, please reach out to us and we're happy to advise about whether a sole proprietorship or a corporation makes more sense for you. Also, feel free to leave any questions or comments you might have in the comments box below, and please subscribe to our page and let us know if there's anything else that you want to know about corporate law in general.